business entity selection. We'll begin by describing corporations. Corporations are the traditional entity type, but they have one really big problem that make them not ideal for most business owners, and that's that they have double taxation. Corporations default to a C corporation tax status with the IRS. So this C corporation double taxation tax status means that C corps have to pay taxes on any profits at the corporate level, and the shareholders, which is what the owners or partners in a C corporation or corporation are called, they have to pay taxes on the money that they make from the corporation as well. So the corporation has to pay taxes on the profits, and so do the shareholders. So the owners have to pay taxes on their own distributions. Additionally, corporations have a lot of formal requirements to maintain that corporation status. For example, they're required to hold an annual meeting each year, keep organized meeting minutes. They have to have a board of directors and name officers. There is one big advantage of corporations, and that's that venture capital firms or some investor types, they strongly prefer corporations sometimes. And they might even require that any business they invest in be structured as a corporation. So if your business is the type of business, if you plan to go into business to get venture funding and to build it up to that level of being a unicorn, so making $1 billion in revenue eventually and going public or selling very, very soon, then you should definitely be considering forming your business as a corporation. In my experience, though, this only really applies to a small number of businesses. Next, LLCs, limited liability companies. LLCs are my favorite entity type personally because they're so simple. So first, they don't have that double taxation problem because the IRS considers LLCs to be disregarded entities when it comes to taxes. This means that LLC isn't actually an IRS tax classification. LLCs are taxed either as sole proprietorship or partnership, depending on how many members. So one person would be a sole proprietorship, multiple owners, it would be taxed as a partnership. And that's what it defaults to. We'll go into whether you can change the tax status later though. Next, LLCs have fewer legal formalities than corporations do. You don't have to have annual meetings, keep minutes, or appoint a board of directors. You certainly can if you want to, though. And then additionally, LLCs can be flexible when it comes to profit or loss distribution. So in corporations, profit and loss distribution has to be in proportion to the amount of shares owned by each shareholder or stockholder. But in LLCs, the members are not required to distribute profits and losses in proportion to their membership interest. So that gives it more flexibility too with how you distribute profits. Overall, LLCs are the easy button of entity type. Okay, so those are the big two entity types, corporations and LLCs. Probably the biggest question I get though is deciding whether to be an LLC or an S corporation. Interestingly, that's not really an apples to apples comparison. So this is how S corporations come in. So either a corporation or an LLC can elect to be taxed as an S corporation. So an S corporation is not an entity type in the way that you form an entity with your state Secretary of State. Instead, an S corporation is an IRS tax election or tax classification rather than that entity that you file with the Secretary of State. So if you want to be taxed as an S corporation, what you do is you send a form to the IRS letting them know that you want to be taxed in that way. Businesses often choose to be taxed as S corporations to avoid double taxation And there might be other tax benefits as well. So a lot of times, the old way before LLCs existed, a lot of corporations would elect to be taxed as S corporations because that solved that double taxation problem that C corporations have. Whether S corporation taxation is beneficial for a business depends on a lot of specific variables individual to that business. So that's something to really think about for yourself and talk at length to your financial and tax advisors about. It makes it even harder because the laws surrounding tax and the tax benefits and how they work, these laws are continually in flux, especially lately. Even just in the past couple of weeks, Illinois passed a law relating to S corporations and taxes and how the taxes affect your income taxes. It's complicated and it might change, before it even comes to time to make your decision. So it's something to keep up to date with. You should always discuss the S corporation election benefits with your accountant, CPA, or tax attorney before moving forward with it. We also do have blog posts and live streams about S-Corp taxation if you're interested in learning more. You should also be aware that there are certain requirements to qualify as an S corporation, so it does make them less flexible than LLCs, and in some ways even less flexible than corporations. So S corporations can't have non-resident aliens, partnerships, or corporations as owners. There can only be up to 100 owners. You can only have one class of stock. And also S corporations, owners of S corporations have to pay themselves as employees. So owners of an S corporation have to give themselves a W-2. So there's less flexibility there and a little bit more administrative hassle. Something that it is possible to do is you can form an LLC or a corporation right away and then elect to be taxed as an S corporation, or you could elect to be taxed as a C corporation if you're set up as an LLC down the line. So the IRS has a window each year when businesses can make this election. So a lot of business owners decide, okay, LLC is the easiest. We want to make sure we get that liability protection right away. We don't need to make that S corporation decision right away. We want administrative ease from the get-go. There's so much involved in starting a business. We'll think about S corporation later, but we just want to get a move on getting our entity set up and getting that liability protection going. And that makes a lot of sense to me. Again, though, highly recommend talking with your accountant, tax attorney, or CPA to discuss the best tax status for your business. But make sure that you're not doing the worst case scenario from a legal standpoint, which is procrastination.